If you recall from last week, we talked about 14 questions that every investor should really have answered when they are vetting an investment sponsor. And for this week, we're going to talk about those same 14 questions, and I'm going to address them in the lens of Rise48 and experience partnering with us. So how many deals have you successfully completed at Rise48? We've successfully gone full cycle on 11 deals that we sold during the periods of 2021 and 2022. Question number 2. What are the total number of units that Rise48 has under management today? As it stands right now, we've got about 11,000 units that we're currently managing in the markets of Phoenix, Dallas-Fort Worth, and Charlotte, North Carolina. Question number 3, can you walk me through a deal that you've recently exited on and what the investor returns ended up looking like? The 11 full cycle deals that we exited from, we produced over a 70% internal rate of return, over a 2x equity multiple with an investment hold period of just 17 months. Now, certainly we don't project these types of returns to come back again, maybe not in our entire lifetime, but we simply sold those deals at the peak of the last real estate market with the goal of maximizing investor returns. Question number 4. Do you invest in your own deals? The answer is yes. In fact, the founders of Rise48 have the most amount of their own personal invested cash in each deal that we raise investor funds for. In fact, Zach Kaptenstall is the #1 single largest investor within the Rise48 investment portfolio. If the sponsors themselves are not willing to invest their own invested dollars into those deals, the opportunity for alignment of interest just isn't there. Question number 5, what markets do you focus on and why? So the markets that we're in right now include Phoenix, Dallas-Fort Worth, and Charlotte, North Carolina. Why we like these markets is there's job growth in those markets, there's wage growth, there's diversification of jobs. We also like markets that have a high concentration of B-class renters, which is the largest demographic of the population in the United States today. Question number 6, what is your value add strategy and how do you implement it? So our value add strategy is to identify properties that were built in the 1980s to 1990s where we can implement and execute what we call a value add business plan, where we bring in our vertically integrated property management company, building construction, building maintenance, and we're really looking to renovate units to force NOI growth at the property level, ultimately with the goal of maximizing returns for our investors. Question number 7, how do you stress test the underwriting assumptions? There's a lot of levers to pull within an underwriting model. And so we have a number of different governors built into that model to ensure that if, for example, we're in a market with expanding cap rates versus contracting cap rates, that we account for that in the underwriting assumptions. We have other sources that we go to, like CoStar, for example, that has a forward-looking trajectory in terms of where they anticipate cap rates to be in any given market in the next 2 to 5 years. And we largely use those assumptions from organizations like CoStar in order to ensure that from an underwriting perspective that we're being conservative in our assumptions. Question number 8, what fees do you charge and why? So we've got an acquisitions fee built into our model. We've got property management fees. We've got exit management fees. Fees do typically change from deal to deal. The fees that we charge at Rise48 are in line with what the market is charging. But what's also important to understand is I wouldn't go after the sponsor that has the lowest fees. And the reason for that is because they then have less fee income in order to be able to afford best-in-class talent. If you think about the execution of a value-add multifamily real estate deal, it takes a lot of people. It's an entire team, an entire army. Right? And so it's really important for us here at Rise48 to make sure that we have enough cash flow, at the property level as well as at the corporate level in order to be able to hire best in quality talent to be able to support our internal operations as well as the operations that are ongoing at the property level. Question number 9, what happens if a deal underperforms and how do you communicate that to investors? Total transparency at Rise48 is at the center of everything we do. Every decision that we make internally, we're always thinking about what's the best way that we can not only maximize investor returns, but also incorporate the fiduciary responsibility that we have to protect and to preserve investor capital. So it's incredibly important in that lens that we are a total transparent shop, which includes access to things like the full financial package, including things like the general ledger, bank statements, a profit and loss, balance sheet, income statement. And we're always very open with investors that reach out to us. We have an entire IR team at Rise48 that can answer any specific investor questions that they may have over the course of that investment hold period. Question number 10, how often will I receive investor updates as an investor of Rise48? We provide monthly investor reporting, which includes full access to the financials, including things like bank statements, the general ledger, income statement, profit and loss, the full financial packages overview. In fact, the information that we provide to our investor partners is at the same level of the information that the senior lender, who's arguably the largest investor in our opportunities, is receiving. Question number 11, who manages the property and is it vertically integrated? That's one of the competitive advantages that Rise48 has in the marketplace today, is that we are a fully integrated operator from acquisition all the way through disposition or the time that we sell the asset. This simply means that we can control everything from managing the property at a local level to construction management, to building maintenance, to where we source our supplies from our manufacturers. Everything is vertically integrated and in-house, and we have now over 300 full-time employees that are all W-2 on full benefits. Question number 12, what is your typical hold period and exit strategy? So we typically project a 2 to 5 year hold on our acquisitions because it takes us about 2 to 3 years to effectuate our business plan and renovate units and force NOI growth. But depending upon where we're at in the current market cycle, it may make more sense to hold that asset for longer. So we like to project to investors a time frame of about 2 to 5 years, understanding that it may make sense to sell or refinance after 2 years. And again, it may make more sense to continue to hold and cash flow that investment for as long as up to 5 years. Question number 13, what are the biggest lessons that you've learned from past deals? And we've learned a lot, as an organization that's really evolved over the last 7 to 8 years. One big one is the way in which we structure our debt now, as opposed to the way that we were structuring debt when we first got started. An example of that, of course, is, doing floating rate bridge loans, with an engineered rate cap on the front end that's really low and in the money. Another big lesson learned, of course, is the importance of being vertically integrated and having local boots on the ground that actually work directly for Rise48. It allows us really to keep our head on a swivel at all times. Third, really it comes down to what I like to call yield on cost. And does it make sense at certain points during the course of the investment hold period to accelerate our renovations strategy? Or is there times during the investment hold period where we need to pump the brakes and really slow down the pace of renovations, because we want to ensure that, of course, occupancy remains strong, and we want to ensure that we're able to hit or exceed our pro forma rent growth increases. Question number 14. What makes you different from other multifamily operators? Number one, I would say our size and our strength. We have the ability to continue to organically grow and scale and hire best-in-class talent to be able to continue, really attacking the market at a time period right now where it's really a buyer's market. And so we continue to do that, and we're able to do that because of the size that Rise48 has grown into over the last several years. A second one is really being able to execute our value add business plan both on time and on budget, which is incredibly important and very difficult to do if you're a non-vertically integrated operator. So of course, number three, the largest one that we hang our hat on is our vertical integration. The market is always changing. There's times of economic expansion, there's times of recession, there's times of oversupply in the market, there's times of higher debt costs, there's times of greater concessions, needing to be given to the local resident base in that market. There's certainly times where competitors enter into the market with new supply. So there's all these different, factors and headwinds that need to be addressed, virtually on a daily basis at the individual property level, and our ability to be vertically integrated and have our entire operating staff as well as local management staff, really connected to Rise48. It really allows us to be able to effectuate our business plan over and over and over again, even in the midst of economic headwinds. Thank you for joining us today. It's really been exciting to walk through these 14 questions with you about Rise48 as an operator in the multifamily space. If you'd like to learn more, please connect with us at rise48equity.com.